My name's Darko Zigic. I'm a risk specialist at Robina Financial Solutions. So the main issues that I actually see with expats, especially regarding risk insurance, is if they're really covered. Now, majority of clients might have cover, as an example, within their super funds, but unfortunately, as soon as clients become non-residents, they may have issues at claim time. So what we want to do is make sure that A, they do have cover in place, and if so, what cover levels do they have in place? Unfortunately, a client of mine who had an accident while being overseas, he thought he could claim on his income protection policy. Unfortunately, because he was classified as a non-resident, no claim was payable. So the main issue that we see is, A, we had a client that was paying a premium, expecting to be covered, and then realising, unfortunately, no, he has no cover in place. It really depends on duration while you're away for, but as a rule of thumb, if you're away up to 7 years, most likely you can get life, TPD, which is total and permanent disablement, trauma cover, and last but not least, income protection. It also depends on the occupation that you're doing, but generally we do find some insurance companies that are happy to provide all three levels. What we usually try to find is if they're more white collar operators, they're more likely to get insurance cover for all the different types of covers compared to if they're doing manual type of work. What we really try to do is do a lot of underwriting or pre-underwriting before we actually speak to the insurance companies. So like this, we can speak to the underwriter and actually work out what cover levels can we actually provide and at what cost. The main issue or the main difference, once again, is just having a look at the credibility of the Australian insurance companies that we have in place. All the Australian insurance companies are backed by APRA and have to go by a strict guideline of rules. Within those rulings, once again, they're appropriate to, I guess, majority of Australians out there to make sure that A, the level of cover that they have in place is appropriate and will be there when they need it. Really depends on the client. Within super, for life and TPD, generally you can get a tax deduction. Once again, what we look at doing is the affordability of the insurance cover and why we actually need to look at that cover arrangements. Income protection, once again, can be funded through super, but once again, depending on tax, you're more likely to get a high tax deduction outside of super. So it's really based on a per person basis.